We welcome Ryk van Niekerk, the editor of Moneyweb and the presenter of the popular radio program Geldsaake on RSG, to talk about this week's amended budget. Ryk, you wrote a very interesting piece on Moneyweb about the budget this week. Do you think the ANC will be able to get this one passed, or will they have to drop their 0.5% increase in VAT?
Well, I think that's going to be a political outcome to get the budget passed, and it will pass. But the more I analyze the budget and what I've learned through interaction with Enoch Godongwana, I interviewed him a few hours after the budget. That piece I wrote before I spoke to him. And then subsequently he delivered a speech at another news event. And it's apparent that this is, I think, one of the worst budgets ever, if not the worst budget. And I'll tell you why. South Africa is in a spot of bother. We've got a fiscal position which is dismal. We've got a debt to GDP ratio of around 76%, which means our debt is around 4 trillion on a 6.5, 7 trillion rand GDP. It's a significant amount of money, and 22 cents for every rand collected by the South African Revenue Service goes towards paying off debt, just the interest payments on it. And here the minister comes and proposes a budget which proposes to increase total government expenditure by 7.8%. Now remember, the inflation rate last year was 4.4%. So he wants to push up spending by 7.8%, which is, nearly double. And then I asked him during our interview, what about austerity? What are the main priorities for government to cut costs? And he said there is no austerity in this budget. He says he's sick and tired of austerity because it doesn't work. It doesn't flow through to improved fiscal ratios. And that they want to raise taxes and through increased taxes, reduce total debt. And then he echoed that sentiment the next day on News 24. And he said, listen, he woke up one morning, listen, I'm sick and tired of austerity. We're going to raise taxes. It was his decision. He takes responsibility for it. Now, that is critical because in the context of the political infighting with the government of national unity, he didn't consult anyone, and that's his version of it. So I don't know what transpired here, but he really, really, rocked the apple cart, and not in a good way at all.
Ryk, but isn't it because they don't know how to cut expenses or to stop the waste, that it's sort of something that they're just not able to do?
Well, I don't, how to cut costs is sometimes quite evident. If you look at any household who doesn't, battle to survive every month, you need to cut costs which you don't believe you really need. You're not going to cut your food budget rather than, for example, your entertainment budget. You need to cut what you can cut with the least amount of disruptive effect. Now, we sit with a cabinet of 72 people at 72 departments where you have supporting staff. You now need to get accommodation in Cape Town and in Pretoria for these cabinet members. You sit with cars for every single one of them. We don't need that. We don't need, in many cases, some of the development projects within government itself, which is a total failure. There are many other programs that can be reviewed. There can be an audit of ghost workers within government. So there can be, a lot of cuts being made. And the reason why it may not have worked in the past, and again, that is the acknowledgement of the minister, was poor implementation, poor individuals in charge of cutting costs and not the service delivery to South Africans. We sit with an economic growth rate of 0.6% last year. There is no option not to cut expenditure. It's like, somebody, a household deciding one morning, we can't survive anymore, so rather get another credit card and let's borrow more. What can go wrong?
You also say that the burden on taxpayers has not been reduced. This is now the sort of proposed 0.5% VAT instead of the 2% VAT that was initially asked. It has simply been shifted. Can you please explain?
Yeah, listen, the VAT increase of 0.5%, I think, is insignificant in many ways. And I think a 2% or 2 percentage point hike would have been a lot more disruptive. But the tax increases isn't only the increase in VAT. What the minister did, and it is astounding that it didn't get more media attention, is that he did not adjust the tax brackets to allow for normal inflationary increases. And he takes around 18 billion rand of additional taxes just by not adjusting the tax tables. Now, how that works is, say you earn 100,000 rand. And now you get an inflationary increase, a 4.4% increase, which is the last year's inflation rate. So now you will earn 104,400 rand. In the past, you paid a certain amount of tax on the 100,000 rand, let's say 10%. Now, if you have the increase to 4,400 or 104,400, that may put you in a new tax bracket. So in the past, when those tax brackets are adjusted, it would be adjusted upwards with the inflation rate. So you would have paid the same tax even if you did get an inflation-related increase. And this is for everybody who's paying income tax. You will pay 4.4% or thereabouts more tax in this new financial year. And that is the most significant tax change, not the VAT hike.
So was this sort of snuck through? Because if I recall correctly, you mentioned that in the first proposed budget, the tax brackets were actually
Yes.
They were amended.
And what's worse is that the tax bracket proposals in the first budget, or the budget that wasn't tabled, actually adjusted the tax brackets more aggressively for lower earners. So it won't only be an inflation-related adjustment, but it was more. So your lower earners, lower income, or lower salaried individuals would have had a bigger relief. So maybe they would have paid less tax than they did under the previous dispensation, while your higher earners would have paid more. And that just disappeared. So what he did is just took the money he lost through not raising VAT by 2%, and he threw it at existing payers of income tax. It's a big policy decision. It was a big decision on his part.
You say that the lack of economic growth and the unemployment rates, I mean, they are biggest problems in this country. And the budget, you say, is not designed to fix the economy. Can you elaborate on this?
Listen, a budget cannot fix an economy. It's a budget. It is how you spend your income and how how much money you will get as income and how much you spend. That is what a budget is. Now, you can be innovative in a way, but still, a budget is just how you allocate the money you receive. However, you can be innovative. Well, just let me interrupt me there. The key here is the president should come and put a strategy for South Africa on the table and say, listen, we need economic growth. We are going to incentivize businesses to invest. That's the president's job, not the Minister of Finance's job. Now, one way to do that is through tax incentives. And this needs to be in conjunction with the president's strategic direction he should set out, which he doesn't do often enough. For example, a few years ago, we had, I think it's in 2021, 2022, There was a significant amount of load shedding. Eskom was in a dire financial position, and then the government, National Treasury, obviously in collaboration with the president, provided for a tax incentive for businesses to claim back 125% of any investment in a solar system from tax. So that means if you have spent 100 Rand on a solar system, you could claim back or reduce your taxable income by 125 Rand. That's a massive tax incentive. And what happened? We saw significant investments in solar installations. So why don't you just expand that? Say, listen, if a business employs somebody else, a new employee, you will get an additional tax benefit. If you invest in a new factory, there will be a significant tax benefit. But that doesn't come. So yes, we've got a dire financial position or dire economic growth, but there can be some innovative ways to encourage businesses to invest more, because only investment in our economy will accelerate the growth. The policies are not working. We haven't seen growth of more than 2% since 2013. And at that stage, the total debt to GDP ratio was around 40%. Then we have just plodded along for more than a decade, and now we sit with a still very pedestrian growth, but a debt to GDP of close to 80%.
Another thing that's in the spotlight at the moment, well, the IRR has sort of put the spotlight on it, is the paying of BE premiums. What is your take on that?
Well,
Government spending on BE premiums.
well, we need transformation in South Africa, and it hasn't been successful in many, many ways. And to look at it in rand and cents, I think is not correct, not the correct way to do it. If you look at the economy at the moment, it is the most unequal economy in the world. And it is not sustainable. It is a social risk that will affect everybody. So there needs to be inclusive growth, which means everybody in South Africa should benefit if the economy grows, and not only the people at the top, which in South Africa's case are mostly white. Now, government should also realize that the current empowerment strategies are not working. And you can have many of the BEE, well, if you look at BEE specifically for the ownership of companies doing business with the state, what it does, it actually just enriches a few people, a few black people, or a few black groupings, but it's definitely not broad-based. Normal people working in the economy do not benefit from that. Those people benefit from affirmative action in a much more significant way than the ownership BEE. Now, does that add to costs of doing business? I don't think so. I think it is more a detergent or a deterrent of growth. And the unintended consequence of that is an unemployment rate of 40% plus.
And then obviously the BE premiums also cost government billions extra. So that's some more taxpayers' money being spent that has not got the effect that we all hope for. Specifics that the budget should have seen. Are there any specifics that you would have liked to have seen in the budget?
I would have wanted to see incentives for businesses to invest. There's an economic indicator. It's the gross capital formation ratio, which represents or indicates the amount of money invested by the private sector and the government into productive assets. And those assets would be equipment, new factories, logistics or commercial vehicles. And if the investment in those assets increase, you will see economic growth. Now, currently, our investment or gross capital fixed formation is around 15% of GDP, 15 as in 15. And for any developing country to really see significant economic growth of, say, 3% plus, it should be closer to 30%. So how do you get companies to invest? And companies will only invest if there's an incentive or they believe that they will be able to prosper and get a return on that investment. Now, currently, I don't think that is the case. So I would have liked to see more incentives for businesses to invest, and there's absolutely nothing to the contrary. The higher taxes will take around 28 billion rand out of the economy that in the past would have been spent by consumers and businesses in the economy. So it will actually put more strain on the private sector and our economy as a whole. And that is a structural, I think, I think it's a strategic mistake. And it's an acknowledgement that government do not understand exactly how the economy works and what should be done to get it growing.
Well, what does this sort of mean for South Africa and the way forward? If this doesn't change, if Enoch Godongwana doesn't change his stance on austerity, what does this mean for us?
Well, I think he should. I think if proven, he should not be in that position. And I think if there is a proper understanding or it emerges that what he did was it was his decision and it was a totally incorrect decision, hopefully he will be replaced. What it means for South Africa is just we're going to plod along as we've done over the past 12 years with suboptimal growth. I think it's a miracle that South Africa's economy is growing at all, given the current circumstances. But by hook or by crook, our entrepreneurs are doing their thing. South Africans are surviving. And so it's more of the same, a bit more pressure. Hopefully it doesn't make such a big impact on the economic growth rate, but it could have been better. That's the thing. And I think what did Jannie Smuts say? It's never as bad as people think, but it's never as good as it can be. And I think it's just, I think that is very apt.